Hello, my friends. Today is June 28th, and this is Markets Weekly. So this past week was another exciting week where we had all these events happen. We started the week with the U.S. basically attacking Iran, and we ended the week with equities at all-time highs. Now, I had thought the stock market would top earlier in the year, and I've been completely wrong. Now, today, let's talk about two things. First, let's have a big segment where we talk about data, markets, political events, and so forth, because there's just so much happening. What would normally be a big news story is just quickly surpassed by another. That's the Trump era, I guess. And secondly, let's talk about what I think is the most interesting news the past week. That is the prospect of an upcoming shadow Fed chair. All right, starting with miscellaneous stuff. So as we all know, last week the US executed a very successful bombing mission on Iranian nuclear facilities. Now, there's some debate, there's a fog of war as to how impactful those activities were. Some people say, set Iran back by a few months. Others say it's been completely destroyed. It's really hard to know. But one of the most interesting stories I've heard on this comes from Say Hirsch, which, as we all know, is a very famous journalist. He's the person who broke the story about the bombing of the Nord Stream pipeline a few years ago, noting that it was the US who bombed the pipeline and not Russia bombing their own pipeline, which of course was obviously ridiculous. Now, Seymour Hirsch has very good sources, and he actually called the weekend strike a few days earlier. According to his sources, they were going to strike the past weekend, and that did come to pass. Now, his latest information that I haven't heard elsewhere is that the strike on the Iranian facilities, specifically the really fortified one deep underground, wasn't actually intended to destroy the facility, which, as many experts have noted, is extremely difficult, even with the really big bombs, because it's so far underground. According to his reporting, the bomb strikes were meant to basically entombment. So the strikes were targeted at the entrances into the Fordo nuclear facility rather than the facility itself. And by destroying those entrances, that means that no one can get in or out of the facility, effectively ending its functionality. So according to his reporting, this was a successful strike, and they were able to basically entomb the facility, making it inoperable. They didn't have to destroy it. It's basically not useful anymore. So if that's true, then that really would spell an end of U.S. involvement. Now, that being said, for all of you who are around during the Iraq War, you don't really need a real reason to go and attack someone, right? Back then, during the Iraq War, the U.S. government was claiming that there were weapons of mass destruction in Iraq, so they launched the ground invasion, and after tearing the country apart, were not able to find weapons of mass destruction at all. It was all fake. Interest groups wanted to attack Iraq and found a reason. So, how this is going to develop, it's all going to be about the political interests involved. And of course, if you are thinking from the Iranian standpoint, you just got bombed, there's nothing you can do about it. The only way you're going to feel safe is if you have nuclear weapons, and that goes the same for any other country out there. So, this is, in my best view, not over, but in remission. Okay. So that would normally be a huge story, but I think everyone forgot about it. The stock market, of course, opened lower on Monday and then began to surge with the idea that, hey, this conflict is over. The U.S. won, and we can all go back to doing whatever we were doing before. And the oil markets responded accordingly, with oil prices tanking, taking out all that geopolitical premium. Now, looking at the data from this past week, we got, PMI data that was okay, showing some degree of expansion. It was above 50, but I think what kind of stood out to me the past week was that personal incomes declined, and that's not something that we see very frequently, and that decline seems to be in large part due to declining transfer payments like Social Security. It also seemed like the U.S. consumers were spending a little bit, although based on consumer sentiment data, sentiment is okay, and inflation expectations have come down a lot. And so if you are a central bank that's worried about inflation expectations getting out of control due to tariffs, which we've been talking about, that's a great comfort. The consumers are no longer as scared of tariff-based inflation as they've been in the past. Now, looking at the employment front, and what's really I think what we've been talking about for the past is that this continuing claims number, that is the stock of unemployed people trying to find a job, continues to increase. What that's telling you is that people, once they lose their job, it's really hard to get back into the labor market. Another sign that the labor market is softening. And I think it would foretell further increases in the unemployment rate. So that's something to look out for. Now, looking at the markets, as we've noted before, S&P 500, NASDAQ, all at all-time highs. If you look at a chart over the past 6 months, it's really remarkable. It looks like we tumbled in April, again, after Liberation Day, but then totally surged, and now we're at all-time highs. And yeah, I find it to be confusing, but other people have other views, of course. We have people talking about, the fiscal deficit, or let's say multiples expansion, prospective rate cuts, stuff like that. AI trade, of course, is back. NVIDIA at all-time highs. So, and of course, volatility is lower as well, pushing investors who are sensitive to volatility back into the market. But yeah, that seems to be happening. And secondly, what really caught my attention the past week was, of course, the dollar. The dollar is just imploding. Looking at the DXY index, we're making multi-year lows, and the decline is most notably against the euro. The euro is, again, surging. Against other currencies, it really depends. I think something worth thinking about is also the Japanese yen. Now, inflation in Japan has been higher than expected, and the market is thinking that, hey, maybe the Bank of Japan might want to hike rates. And at the same time, the market continues to price in rate cuts in the US. And so even as the interest rate differential is widening, the yen just kind of meanders back and forth, even as the dollar is broadly weakening. So I think that's something interesting to take note of. Okay, so now let's talk about our second segment. That is, of course, Fed Chair, Shadow Fed Chair. So this past week, we had some interesting communication from President Trump. In 2 press conferences on Friday, he actually said this.
The only problem we have is we have a Fed guy that doesn't understand what's happening, and it would be great if he'd lower the rate because we'd be able to borrow a lot cheaper.
What are you considering for the Federal Reserve then? And are you speeding up that process? I see Secretary.
Oh, he's terrible. He's terrible. I mean, I have a list of things. We're like 38 on the list. We pay, Cameroon and different places are paying the same as us. Because, you have somebody sets a rate at 4% or 4.5%. It's hard to go out and say we should be paying 1% when you have your so-called experts doing that. And the sad part is, as per the question that you asked about tariffs, we've had the tariffs and we have less inflation than we had before. What we have is a hell of a lot more money, a hell of a lot more income, and we shouldn't be paying a rate like that. In other words, when we pay a rate, I'll tell you, each point is the equivalent of $300 billion. So if we had it down 3 points, because I think we should be at 1, you have Switzerland is at 0.25. In other words, 25% of 1%. And they're the number 1 right now. But we should be the number 1. And soon you're going to have, I think, you're going to have where the people will pay will pay, like we had a few years ago, where you put up money, you loan money, and I mean, you actually, instead of paying, you get paid. I love that.
So basically, as we all know, President Trump is unhappy with Chair Powell and has been talking about naming a successor to Powell earlier, basically reviving the shadow Fed idea floated by Secretary Bessent before he was appointed. So the thinking of this is that the market is forward-looking. So the market pays attention to what the Fed chair is guiding towards and will price that in. So Chair Powell's term ends next May. So what if we were to appoint the next Fed chair a little bit earlier, say maybe in August, September, October, something like that? And if the market already knows who the new Fed chair is, and that new Fed chair goes around making tremendous dovish noises, saying that he's going to cut bigly, then maybe the market will begin to ignore Chair Powell and price in the new interest rate path as sketched out by the new Fed chair. And so in a sense, Trump would have the new Fed chair would have more control of monetary policy a little bit earlier. So that seems to be the thinking. Now, we were all wondering just what does Trump exactly want? What is his ideal interest rate path? And now he's told you. He thinks that interest rates should be 1%. And if you listen to the end of his segment, it seems like he's also, kind of pushing for negative interest rates, whereas, you borrow money and someone pays you. So I don't think that's going to happen, but he would like rates to be cut by 300 basis points, all the way down from 4% to 1%. And his justification is in part no inflation and, of course, the fiscal deficit. Now, I think we all can see that President Trump doesn't really care about the fiscal deficit, but there are people in the political realm who do. We have a lot of people, Republicans in Congress, who care about it. We have Elon Musk who cares about it. So there is a constituency who cares about it, and it seems like he's trying to build support from that constituency to further bully the Fed. So who could he appoint as shadow Fed chair? We do have a few names. So let's talk about what are the potential names floated out and how I think likely they will be to be Fed chair. Now, the name most commonly floated out, of course, is Kevin Walsh. Walsh was a governor at the Fed earlier and was one of the front runners to be Fed chair after Yellen, but of course Powell was chosen instead. So Kevin Walsh is kind of an interesting character in that at his appointment, people were pretty surprised that he got appointed because he's a lawyer by training and did not really have any obvious training in macroeconomics or monetary policy. And over the coming years, he continued to prove to everyone that he really did not have any grasp of monetary policy. He has basically consistently been very hawkish all throughout his career, even complaining about wanting to hike rates on the eve of the great financial crises in 2008. His communications over the past years really shows that he really hasn't changed as much. So that tells me that he's probably not the guy for the job, and I don't really understand why he's even mentioned at all. Trump wants a dove, this guy is a hawk, it just doesn't mix. One potential reason could be that he just kind of wants to, have someone in stark contrast for TV reasons, just to, keep the apprentice-style tournament going. But I don't really think this guy has any chance of being Fed chair. It just doesn't make sense. Secondly, of course, that's been floated is Secretary Bessent. Now, from people who are plugged in, they tell me that Secretary Bessent is probably going to have the option of being Fed chair if he wants. Now, Bessent, of course, obviously was a former hedge fund manager, and by all accounts is doing a really good job at the U.S. Treasury. Now, the question is, why would Secretary Bessent want to give up being Treasury Secretary to become Fed chair? Is Fed chair a better job? Well, let's listen to President Trump himself.
I think it's the greatest job in government. You show up to the office once a month and you say, let's see, flip a coin. And everybody talks about you like you're a god. Oh, what will he do?
So basically under Trump, Fed chair you're just going to be doing one thing, right? Figuring out how to cut rates. Now, why would the Secretary of Treasury give that position up for just to be basically a lackey? As Secretary of Treasury, Bessent is overseeing over 100,000 people. He has power over the IRS and all sorts of other stuff. He's flying around the world negotiating trade with world leaders. He's cracking down on fentanyl by sanctioning payments of Mexican cartels. And of course, if he wants to, he can toggle with the composition of issuance and try to influence monetary policy indirectly, which President Trump has also suggested as well. So in this era, it seems really obvious to me that being Treasury Secretary is much more influential and much more interesting than just flipping a coin and toggling rates. So there's really no reason for him to have that to want to leave and be that. So I don't think that's going to be him. Now, another potential name floated out is Kevin Hassett. Now, Kevin Hassett is, your traditional PhD economist, but he's also someone who has a very strong relationship with Trump. He was part of the Trump administration the first term, holding the title of chair of the Council of Economic Advisors, which is basically, let's say, the White House's policy think tank. And today, he's holding the chair of the National Economic Council, which is a similar policy organization within the White House, but with a bigger portfolio. So he's basically been the president's economist for a decade, and someone who has shown over and over again to have the president's trust. Now, would he want to move from the NEC to Fed chair? Absolutely. Fed chair is a huge, unequivocal upgrade over the NEC. So I think that's probably going to be the most likely outcome, is that President Trump is going to pick this loyalist guy who's going to be who's basically his economist. Now, can he get him through the Senate? I don't know. I mean, Kevin Hassett definitely has the resume. CEA chair, NEC chair, looks good on paper. There'd be definitely concerns about whether or not he'll be, Arthur Burns or something like that. But I imagine there could be enough doubt, and the president has enough control over the Senate to make that go through. So I think this is very much the front runner for being the new Fed chair. Now, other possibilities, of course, is currently Governor Waller. Now, Governor Waller was a Trump appointee, and he's notable for being the person right now, one of two people right now calling for rate cuts as soon as July. Now, Governor Waller has a really good record at the Fed. He was correct in calling for a soft landing, for example, saying that we could hike rates, but rather than have unemployment go up, we would just have the amount of jobs outstanding decline, and so we could have a soft landing. And as we're at the moment, he's calling for inflation to be transitory because tariffs are not a change in the rate of change of the price level, that is to say inflation, but really a one-time price shock, which by all accounts is what standard economic thinking would dictate. And also he's paying attention to the deterioration in the labor market. So the position he's taking for rate cuts in July is totally reasonable. And of course, I'm sure it doesn't hurt that it helps his chances Fed chair. Now, Waller has also been in his communications a bit more sympathetic to the MAGA movement, talking about the distrust of institutions and so forth. So he's definitely angling for this job. He'd make good Fed chair, but what he lacks is a close relationship with President Trump. And of course, there are people in the MAGA world who remember that he voted for the 50 basis point cut right before the election last year, and that I think that's a bad mark on his CV. So I think he'd make a good Fed chair, but not front runner in my view. Now, one other thing that I'll note is that monetary policy is going to become more politicized. Now, that seems to be in line with the era, right? Everything is changing. Now, what really struck my eye over the past couple of weeks was Governor Bowman, well, now Vice Chair of Supervision Bowman, actually saying that we should be cutting in July. This really stands out because Bowman has been the most hawkish governor over the past few years, right? When everyone else was talking about cutting, she was like, I'm going to reserve the right to hike. And now she's doing an about face and saying that we should cut in July, which is very out of character and also follows her recent promotion to vice chair. So that tells me this is largely a political decision. Not to say that it's indefensible as a monetary policy idea, but that it's just really out of character for her. So yes, we are heading into a world that the Fed will be more politicized. On top of that, I'd also add that President Trump is probably going to have the chance to remake the composition of the Board of Governors next year. Now, Governor Kugler, her term is going to expire earlier in the year, and when Powell's term expires as Fed chair, customarily, not always, but customarily, when you are Fed chair and your term ends, you resign your position on the Fed board and go do other stuff. And so President Trump could actually appoint another governor in his place. So overall, he could appoint two people next year. Now, it's still a minority, but that does give his people a bigger role in monetary policy. Now, the overall impact of this, of course, it's going to be, I think, pretty chaotic. Remember, not too long ago, when President Trump was talking about firing the Fed chair, installing his own person, the markets really didn't like that. You had the dollar weaken, you had Treasury yields rise, and so forth, and equity markets sell off. Classic emerging market stuff. But as I said then, and I say today, that reaction was unnecessary because sooner or later, President Trump is going to get his fifth person, and it looks like it's going to be sooner. And this week, I'll write about what I think would happen or how the market would react. So definitely interesting stuff to keep in mind. We are seemingly becoming an emerging market. Again, this is a process. It's not a one-time event. But definitely, the future will not look like the past. All right. So that's all I prepared for today. Thanks so much for tuning in, and I'll talk to you guys next week.